Good morning. It's Monday, April 7th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So it was a wild ride in the overnight trading session. People were in complete panic mode. The futures opened with a brutal sell-off where the S&P 500 and NASDAQ declined by 5%. Silver corrected down to 27.54 and Bitcoin hit 74,635. The gold-silver ratio jumped to over 105 to 1. So now is kind of the time you get back to the basics. You pull up your charts. You use technical analysis. You focus on risk management. You focus on position sizing. You watch the positions you put on because of the fact that concentration risk can come into play. A simple tool that I have on many of my charts is the average true range. I like to know what are the daily fluctuations that I'm expected to occur on one particular position or one futures contract, and then multiply that out by the number of contracts that I or clients will look to have on in a particular account. Something I'll also note is that markets, they oftentimes crash from oversold territory. Friday was something like silver, was something like gold oversold. Yes, it was. But oftentimes we get those crashes that occur because of the fact that you have forced liquidation, you have margin calls, you have people in full panic mode triggered by emotions. Something that I have that sits over my desk is that particular sign that says trade like a champion today. And I oftentimes got to look at it and reflect on my inner self, and it helps control a lot of the emotions that are involved with trading. So looking at the equities and doing a quick data check here, we are seeing futures significantly off their lowest levels here, with the S&P 500 about 200 points off its lows. That's a massive move coming from stocks tumbling, with a 3-day wipeout in the global equities reaching $9.5 trillion of money taken off of the table. So we saw Chinese shares, they plummeted, and a closely watched Chinese gauges here, especially in Hong Kong, they tumbled 13.8%. So we saw the Hang Seng fall to its lowest level in its worst trading session here, not its lowest level, but having its worst trading session as far as points wise since 1997. So you get a mid-morning rebound here, and we're seeing it in copper, silver, soybeans, soy meal, crude oil prices, a lot of things that are hinging on China. And Chinese policymakers, they discuss measures to stabilize the economy and the markets in response to U.S. President Trump's tariffs, including accelerated plans to boost consumption. So the measures are focusing on boosting consumer spending and the subsidies for some exports, which may include a stabilization fund to try and support the stock market. So the policymakers have concluded that China has really built enough up to support its economy. The scale and the timing, though, those are yet to be determined and finalized because of the fact that, remember, our tariffs on them are set to take place in a couple days, so they won't come with these stabilization funds until shortly after. But it looks like both parties are moving closer in a direction, and this comes despite a lot of the headlines and the sound bites that are coming out of President Trump. So some things that I'm watching here, like crude oil, and I believe that many of these commodities are starting to come back on sale. If you remember, during COVID and hitting some of those worst levels, we saw silver futures get down to about $11.76. We saw crude oil futures dip negative at one point. Now, it's not to say that prices don't continue to go down, but the reality is it's oftentimes the time that you're looking at spending in these particular markets, or the scope of how long you're thinking out in these particular investments. Oftentimes you can start to turn the tide and start to look 3 months, 6 months, and even a year out, where will prices be? So we saw crude oil futures dip below $60. The overnight session here, $58.95. Futures are back over that $60 level here, down about $1.05. We saw Saudi Arabia, they are concerned. They cut their flagship oil prices, citing the deteriorating demand outlook. But the reality is that many of these budgets that are set by these oil-producing nations, they are going to have to be brought front and center and figure out what type of production are they going to need to do in order to match some of their budgets here. We also saw Goldman Sachs, they cut their price outlook for crude oil 2 times in the past weeks. So it seems to be a race to a bottom, not only on the S&P 500, but on a lot of key commodities as far as what the price outlook is. And we like to see them cut those price outlooks so fast that prices start to turn a corner and they end up increasing those price outlooks going forward. So you look at something like copper. Just 2 weeks ago, copper prices were surging and traders were warning that the threat of the U.S. tariffs on the metal would squeeze global supplies. Now copper bulls are confronting one of the market's worst ever sell-offs here, concerns with the outlook for demand. So, and despite this current downturn, you look at the long-term outlook remains strong due to its role in the energy transition and the difficulties in finding new deposits, which will require higher prices to justify the investments for new supply. Oftentimes, lower prices, the cure for that is lower prices, and conversely, high prices cure high prices. So I think that futures are really going to kind of snap back and start to revert to the mean. Now you look at some other things that are coming to the table in the background, the CME's Fed Watch tool, and we're going to want to start to watch this closely because traders are now boosting the expectations for the Federal Reserve to cut interest rates about 5/4 basis points. So they could be throwing in a 50 basis point interest rate cut at some point during the year here. Now shifting gears to the ETF flows, the exchange traded funds, they cut about 57,000 troy ounces of gold in the holdings on Friday's session. And then also they cut 479,000 troy ounces of silver on the previous session. So that was the fourth straight day of declines. And that's where we saw that continued sell-off in the silver market. It was the longest losing streak since February 3rd. With the snapback of prices, we'll want to check tomorrow and see if they started to purchase the dip on many of these different commodities here, and specifically at many of these metals. So the year-to-date change here is 6.2%, and then the change on the silver market, 0.2%. So they're still positively holding as far as investments into the ETF flows on gold and silver, with gold doing just a bit better than the silver market still. And of course, that's reflected again in the gold-silver ratio. So 105 at one point that I was monitoring, now we're at about 100 to 1. Now looking at China and trying to really validate, are they going to do something here? I'll oftentimes look at those key markets like copper coming well off its lowest levels, crude oil futures well off its over levels, but then I'll go out beyond the metals markets here and I'll look at soybeans, positive on the session, soy meal, positive on the session. These are a lot of key commodities that China needs to have, because I really don't believe that China will have enough soybean supply when you go out towards the back half of the year, because supplies will start to get tight in Brazil and they'll have to start to import from the US. They recognize that. That's why they got to make some kind of deals here going forward. But again, it's time to kind of come back, take a step back, look at the position sizing, look at this relief rally that we're getting here a bit in the markets. This doesn't mean that a bottom is in place, but it's oftentimes the time where you can look at shuffling the cards, looking at other commodities that may be on sale and have not yet recovered, that have good long-term prospects, and take down some of that concentration risk that we're oftentimes seeing and we're oftentimes susceptible to because of the fact that we look to dollar cost average in a lot of different commodities. So you got any questions, reach out. We'll shoot out an update on the chart levels here. Many of these chart levels, remember, as prices change, support levels change. So it could be significantly lower on a lot of commodities, and don't be alarmed by that because of the price action we're seeing here and the dramatic declines in these markets. So remember that futures and options trading, it does involve risk of loss, and past performance is not indicative of future results. If you got any questions on futures and options trading, reach out to us. And remember, good luck, good trading.